All right, so if you are a mutual fund investor or willing to be one, you have to master the art of timing your investments. Since mutual funds primarily rely on equity stocks or debt instruments, knowing when to invest in as important is as knowing where to invest. So we are actually talking about new fund offers over here, and what do you think? How do you understand NFOs, and what should you be keeping in mind when you want to invest in an NFO? Should this be an investment option for you at all? We have Mrin Agrawal, founder director of FinSafe, with us to talk more on this. Mrin, hi, good evening, and welcome to the show. Not as many as in numbers that we saw last time coming. We have a few NFOs that been launched recently, but very interesting ones. Before I get into the do's and don'ts and the criteria based on which you should be deciding to invest in NFO or not, let's talk about the new launches. I want to start with HDFC Defense Fund, which sounds very unique and very different, in terms of being a sector or a thematic fund. How would you explain what's the structure of this fund?
So good evening, and thank you for having me on the show, Kavita. Well, this is a fund that invests in defense and allied sectors. Basically, from what I saw in the presentation, it's a small subset of stocks and mainly PSU-oriented stocks, basically. So it is a extremely high-risk sectoral fund that basically is riding upon the theme of defense spending, Atmanirbhar Bharat, and the fact and the big focus that's there on defense in India. So that's what the fund is all about.
All right. We will talk about the risk factors and the decision to invest in it or not later on. But then going ahead, the second name on the list is BNP Value Fund.
Yeah, so it's a fund that basically looks at the value style of investing, looks at stocks which are undervalued at this point in time and which could have a growth potential in the future. So just like many other value funds, this is another offering in that space.
Next is a business cycle fund from Quant AMC. Now that's the NFO that's people are really excited about, and especially the kind of return Quant's fund have given in the past. Being a small AMC, few of categories have been really hit in investors. What about Quant Business Cycle Fund?
So essentially, business cycle funds have been again around for more than 10 years. There's a limited number of funds in this space. So typically what these funds try to do is try to look at different business cycles and try to catch the cycle at the beginning of the cycle and try to do allocations based upon how they see the business cycle basically playing out, right? What I find in these funds is that the business cycle funds, if you look at the existing funds that are there, haven't had that great a performance, or let me say outperformance over the bench, over a simple Nifty 50. And these funds tend to also be having very high expense ratios compared to more broad-based funds. And again, the fact remains that any fund today would be looking at a business cycle before making the next bet. So I don't really find anything so unique about any of these funds that we've actually listed down. I mean, if you look at the value category, that also already exists. Of course, the defense fund is something that's different, and for people who do have an idea about the sector and want to take a concentrated exposure, it's a good bet.
UTI Housing Index Fund. Now that sounds something new.
Yeah, that sounds something new again, going on the whole housing space basically. But Kavita, honestly, like the issue with all of these funds, except for the Nifty 50 equal weighted fund, all of these funds tend to be thematic or sectoral in nature, and again these come with their own
concern because
disadvantages.
which is the point in concern, Brin, because till last year what we were seeing a lot of passive funds being launched. We did see a few innovative themes coming up from AMCs, but this time it's more thematic and sector oriented fund. So first of all, investing in an NFO where there is no track record of a fund, even if it's coming out from an AMC that's been in the business since ages, the fund is new. You don't know how are they going to manage. You don't know the kind of conditions going ahead for the fund unless and until it's like a pure large cap or a mid cap or a known category that you can track of, because you have a basic understanding as an investor. But these are thematic and sector funds. One really needs to have a co-portfolio in place before they want to diversify in something like this. Now, talking about HDFC Defense Fund, it sounds very kick-ass so far, okay? But then you need to have the risk appetite. You need to have an understanding of this particular sector, which gets me to the question, how do you get a sector understanding, and what should be that stage when you should be investing in an NFO which is so concentrated?
So, firstly, I agree with you that these are all tactical allocation funds. These are not your core allocation funds, right? And, with tactical allocation, now you could keep aside an amount, let's say 10 to 15% of your equity portfolio for tactical allocation. But then you need to be very clear about where you want to tactically allocate this. I mean, what are the sort of sectors or what are the sort of themes? And, the other thing with a lot of tactical allocation is that while we always tell people not to time the markets, this is something in which you do need to have a clear strategy for entry and exit. Now, I also find that a lot of NFOs actually come when, there has been a significant run up in the stocks as well. So people who are investing into this need to be mindful of that fact as well. I mean, we've seen a good run up in PSU stocks, right? So people need to be mindful of the fact that they're entering after after there's already been a good amount of run up. And with any NFO, as you said, there's no track record. You don't know if the theme is really going to play out. Look at the whole pharmaceutical theme or the healthcare theme, which was so big in 2020, right? But 2021, 2022, healthcare stocks have been right at the bottom, right? So the main thing is that if you are planning to do a tactical allocation, you need to be very clear about what sector you want to do it in, and it has to tie in with your risk profile and your investment strategy. A lot of investors get into it thinking it's something different, something new, let's just try it out. I don't think that you can have that sort of a stance to say, let's just try it out, because, when you try it out, you're putting some small amount. It's really not even going to make a big difference, even if it works out really well, right? Also, you must remember any NFO, any sector fund comes with much higher costs, right? Than an index fund, or let's say than a broad-based flexi cap fund that has been around for years. And, so you need to be mindful of the costs as well.
All right. One fund I want to really, because I think a value fund is something that's a category that's really known to investors. And when we talk about BNP value fund, so far, any point that makes it or that differentiates it from the existing lot in the category?
Not something that comes to my mind, honestly.
Mm-hmm. 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 So if one wants to have something where you can have a value strategy, there are already funds in the category which can be recommended and which can be looked at?
Yes, that's what I would say. I mean, see, I know that, past performance may not be emulated in the future, but I would always go with a fund that already has a past track record that you can look at, and that will be lower cost as well, over, trying to look at an NFO.
Now, instead of having a tactical allocation, first of all, how important is a tactical allocation? And even if we talk about tactical allocation, should an NFO be an option for that, that part of diversifying your portfolio?
So I don't think that, tactical allocation is absolutely necessary for everybody. In fact, it's mainly for advanced investors, suave investors, who are wanting to manage their portfolios actively. They can look at a tactical allocation. I mean, to be honest with you, for a majority of investors, I think, their focus really needs to be on the core portfolio, looking at getting the core portfolio right before really looking at taking these sort of bets. So that's the question on the tactical allocation. And the second part being, do I use an NFO for tactical allocation? Well, if you understand this sector and you believe that this sector is going to have good performance, and you have a good amount of knowledge in this particular sector, and you want to take a concentrated bet, then I think it's fine to look at doing the NFO. But don't just do it because it's available at 10 rupees or because it's something new that's come out right now.
One more thing, the point that you and I are discussing, I mean, I'm sure it must be considered by these AMCs also who've launched these kind of funds, right? So what's actually driving them to launch sector or thematic funds?
I don't know. I mean, probably they have some data that shows them that investors want this, or it could just be to increase their product portfolio. I really don't know, but I think, again, for a majority of investors, I don't think that they should look at these funds, because in any case, the high conviction bets from any of these themes or sectors would be there in the broad-based funds as well.
All right. So just because the theme or the sector looks very fancy doesn't mean that you need to have it in your portfolio and you need to put your money into it. The kind of NFOs that we just spoke about, anything that's already existing in these categories where one can look at, anything that you can recommend?
Well, the equal weighted index funds, I think, have been around for the last couple of years. And business cycle funds have also been there. Value funds are also there. I mean, honestly, Kavita, I would actually just recommend that do an index fund like a Nifty 50, or look at doing a flexi cap fund. My favorite always still remains Parag Parikh itself, or Kotak. I would just say that, if you want all of these themes and you want all of these sectors, you can actually just get them in a nice flexi cap fund, which is much lower cost simply because of the size. And you don't need to go and take, it's well diversified as well, so you don't need to take these concentrated bets. So I would just say that instead of doing all of this, just go and invest in a simple flexi cap fund.
All right, so that's all about NFO. I think we've discussed quite in detail about when and how you should be investing in NFO and why should you avoid it if at all you should. But then let's move on to our other topic, which is managing your expenses. Now, Mrin, a lot of time what happens is people assume that investment journey means you need to have a large corpus, first of all, in your hand, so that you can invest that money. Okay, and a lot of time people feel that they have missed the bus because they do not have enough money to put in the market or anywhere, in fact, to invest. A lot of time people don't do the right kind of budgeting, where they don't know how much can they save, and accordingly, if there is no saving, there is no investment. What I really want you to help our viewers with right now is how can you actually figure out your savings amount which can turn into investment, and how little is needed to start that investment journey that you've been dreaming about since years.
And this is the most important part of it. So you could be earning whatever you are, but finally it's about, how much you're saving and how much you're investing. So it doesn't really matter what your earnings are. And this is a very common question that I get, that I'm not able to save. And even honestly, we've done some surveys and we found that most people actually save less than 15% of their take home, right? And that's a very, very low number. If you really want to build wealth, right? So in order to build wealth, what is important is not only to earn well, but more important, it is to save well and invest well. So how can you really start saving more, right? And I think the only way to do it is by following some sort of budgeting rule. Now, there are two ways to do it. One, you could follow a rule, and what I recommend is 30-30-40, which is 30% expenses, 30% EMIs, and 40% savings. Or if you find it very difficult to stick to these sort of numbers, then you could say, okay, whenever my income comes in, first I push out whatever I need for my expenses and whatever I need for my investments. And then what I have left over is actually what I can actually spend on my lifestyle expenses, right? So there are two ways to really do this. I think, just like in physical fitness, where you have a goal to reach a desired weight, you first of all need to start by saying that I want to try and save at least 40% of my take home. So if you are at 15% today, I think your immediate goal should be looking at bumping it up to 25% and then looking at taking it up further, right? Another thing that really helps is to automate investments. So before you can spend that money, push it out into investments, and that really, really helps. Today, lifestyle investments are a very, very big part of the total expenses. And I think it's good to basically make a list of these lifestyle expenses and see, where is it that you're spending and what is it that you can really cut down. Now, even within the 30-30-40, where I said 30% is for expenses, I would say, break that down further and say, okay, I'll keep 10% of my overall income for lifestyle expenses or 15% for lifestyle expenses, right? So have a limit and stay within that limit. And it's akin to your physical fitness where, you're not going to go beyond a point on, and you're going to ensure that you stick within the limits, right? Now, again, a lot of people face this issue where they don't have much left after expenses. So what can you do at this point in time? First of all, make a list of all the expenses and create a tracker in a simple paper or an Excel spreadsheet and mark out, what is it that you can cut down? It's again, like what can you cut down in your food to make yourself more fit? Or what are the things that you can cut down, for your own wellness, right? It's the same thing with your financial wellness as well. Of course, you'll have to go on a spending detox as well. So if it means removing apps from your phone, if it means not getting out on the weekends, whatever it is, you will have to figure out what is that spending detox that you want to have in order to save more money. I mean, finally, it lies in your hands, right? I mean, you cannot increase your income, but you can reduce your expenses. So that's what you'll really have to focus on. The other aspect is also that if you are not investing not saving too much and hence not investing too much, then one of the other things that you also need to do is look at maybe taking a slightly higher amount of risk in your investments to make up.
All right. Also, what's that minimum amount with which you can start your investments?
Well, you can start investing with 500,000 rupees in mutual funds or even with PPF or NPS. The minimum amounts are like really low. But, I would always, instead of going by the minimum amount, I would say that, track it as a percentage because that's what, will then help you have a goal to work towards.
That was a question so that people don't have any excuse saying that they don't have any money left, end of the month or beginning of the month, and it's just 500 rupees or maybe even 100 rupees, if it's an SIP that you want to start. All right, Mrin, thank you so much for being on the show and helping our viewers with various aspects of financial planning today. We move on, and we at the Times Network are back with our flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda as we move forward on the path of integrated, equitable development, which is all inclusive, pervasive, universal, and one that strengthens not just the Indian economy but the global one as well. To pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, and corporate world. So get ready to catch all the action here on Times Network.